Hey there, and welcome to this explainer. Look, think of me as your trusted accountant, just sitting right across the desk from you. Today, we're going to build a rock-solid foundation for your new small business. Because, when you're just starting out, getting your financial records set up correctly, that is literally the single most important thing you can do for your long-term success. But yeah, opening up a brand new, totally empty accounting software package, that can feel incredibly overwhelming, right?
Does it kind of feel like you're suddenly expected to speak a completely foreign language? Well, you're definitely not alone. I see new business owners struggle with this every single day. Using a generic accounting template is a lot like buying a high-quality, off-the-rack suit. I mean, the fabric's excellent, the structure is professional, but until you actually tailor it to your exact measurements, it's just not going to fit right. My promise to you is that by the end of this explainer, we're going to demystify all these templates, and you'll know exactly how to tailor that suit to fit your business perfectly.
Okay, let's dive into this. Here is our roadmap for today. We're going to start with the solid financial foundation, then compare sole proprietor versus limited company structures. After that, we'll look at customizing your blueprint, the power of catch-alls, nailing accurate VAT returns, and finally, verifying local tax rates.
All right, Section 1, the solid financial foundation, building on IFRS. Let's start with the absolute bedrock of your new accounting system. International standards. So your generic templates are actually built on IFRS. That stands for the International Financial Reporting Standards. Now, you might be wondering, why on earth does a small business care about global standards? Well, it's because this framework makes absolutely sure that your financial statements are consistent, transparent, and comparable worldwide. Whether you're showing your books to a local bank manager for a loan today, or maybe an international investor 10 years from now, your numbers are going to speak a globally recognized language of financial truth. It brings instant professionalism to your SME. And because your template is built right on this IFRS foundation, it's designed to scale effortlessly. You're starting out with SME-friendly structures, using standard 4-digit man accounts and 3-digit sub-accounts. But here's the kicker. As your business grows from a scrappy little startup into a much larger enterprise, the software is already ready. It's totally pre-wired to handle advanced Class 6 and Class 7 expense reporting by function, like, say, separating out your distribution costs from your administrative expenses. You're not going to have to rip out your entire accounting system and start over down the line. This blueprint literally grows with you.
Moving on to Section 2, Sole Proprietor versus Limited Company, Finding the Right Fit. Let's get into a critical early decision, which is matching your software template to your actual legal business structure. Before you even think about customizing, you've got to select the right starting point. Take a look at this South African sole proprietor template, for example. Specific baseline charts of accounts exist for different legal structures. Honestly, choosing a template that already has the baseline architecture for your exact entity type, that is going to save you a massive amount of initial setup work.
Now, what's really interesting about this slide is how these two business types handle owner loans entirely differently. If you're a sole proprietor, loans from you to the business are legally indistinguishable from your personal assets, right? So the template correctly classifies them as equity under Class 3. But if you operate a limited company, an owner loan is a distinct, formal corporate debt. The template for a company automatically classifies this as a liability under Class 2. Getting this right from day one is going to prevent a massive headache at year-end, trust me.
Next up, Section 3, customizing your blueprint, tailoring the template to you. Once you've got that baseline, it's time to transition from the generic structure to the exact actions you need to take to make this template your very own. Think back to our tailored suit analogy. This right here is where we hem the sleeves. It's a super straightforward 1-2-3 process. Step 1, you just review the standard accounts they've provided. Step 2, you add the specific sub-accounts for your unique operations. Maybe you need a specific revenue line for a brand new product. And Step 3, simply remove or hide the generic accounts you're never going to use. That keeps your drop-down menus clean, fast, and easy to navigate.
But I'm going to let you in on the real secret to generating completely accurate, highly professional balance sheets, adjusting your reporting groups. You absolutely must review and align Account Group 1 and Account Group 2. These groups dictate exactly how your individual accounts roll up into your final financial statements. Aligning these with your specific ownership and reporting requirements ensures your data is grouped perfectly when it's finally time to generate those reports for the taxman or your investors.
All right, Section 4, the power of catch-alls, keeping your ledgers clean. Speaking of keeping things clean, I want to introduce you to a specific numbering convention built right into the chart of accounts that is absolutely going to be your best friend.
-900. Now, it might just look like a random number, but in the world of these templates, it's actually a bit of structural magic.
This suffix is used across the template to designate catch-all subaccounts. Think of these -900 accounts kind of like the closets in a really well-designed house. They give you a flexible, safe space to just capture miscellaneous adjustments or minor, hard-to-categorize transactions without cluttering up your pristine, standard accounts. Plus, every major group in the template includes its respective -900 account. That ensures perfect, predictable symmetry across your entire ledger. It literally keeps all the daily financial clutter neatly tucked away out of sight.
Moving to Section 5, Nailing Accurate VAT Returns, Stress-Free Compliance. Let's shift gears to the topic that undoubtedly causes small business owners the most anxiety: taxes and government compliance.
And this brilliantly illustrates exactly why a localized template is worth its weight in gold. Just look at this mapping. The pre-built VAT accounts and specific VAT codes in your software are actually designed to align directly with the official VAT return boxes of your local tax authority, whether that's the VAT 201 in South Africa or the standard VAT return in the UK. This means your SME tax record keeping transforms from a manual, incredibly stressful scramble into an automated, highly accurate compilation. The software literally organizes your data the exact way the government wants to read it. Talk about a relief.
Finally, Section 6, Verifying Local Tax Rates, Your Compliance Checklist. As your accountant, I do have to deliver a serious professional warning here regarding the legal reality of shifting tax regulations.
While the structure and the mapping of the template are practically perfect, the actual tax percentage numbers fluctuate constantly. Governments change VAT rates, corporate tax rates, thresholds, you name it, they change it all the time. Your software gives you an amazing vehicle, but it's completely on you to make sure you're putting the right fuel in it.
So, before you start processing any live transactions, you absolutely must follow these exact, actionable steps. Step 1, consult official resources. Go straight to the source, like SARS in South Africa or HMRC in the UK. Step 2, verify those current rates with a qualified accounting professional, just to ensure no recent emergency budgets have quietly changed the rules on you. And finally, Step 3, implement those verified rates right into your software's chart of accounts. Make sure you do this before you hit save on your new system, and you'll ensure absolute compliance.
Setting up your accounting really doesn't have to be a nightmare of foreign jargon and confusing codes. By starting with a localized IFRS-compliant template, adjusting it to your specific business structure, and verifying your tax metrics, you now possess an incredibly robust, scalable financial blueprint. You've tailored the suit, and guess what? It fits perfectly. The foundational work is done, so the only question left to ask is, what are you going to build on top of it?